Last week, there was a report that the African Union is protesting a mischaracterization of the financial status of the African Export-Import Bank, whose credit rating has now been downgraded. A governance program of the African Union, the African Peer Review Mechanism, APRM, said the decision by Fitch to lower the grade of the bank, often known as AFREXIM Bank, was erroneous. On June 4, Fitch Ratings lowered AFREXIM Bank's long-term foreign currency issuer default rating from BBB to BBB- with a negative outlook. Fitch cited an increase in credit risk and weak risk management policies, adding that non-performing loans stand at 7.1%, which is significantly higher than the 2.44% ratio reported by the lender in its own disclosures. The difference was due to treatment of exposures to somewhat troubled sovereign governments of Ghana, South Sudan, and Zambia. Hello, welcome back to Global Business Insights, where we take a closer look at the main business headlines moving markets all over the world. The Africa Peer Review Mechanism is telling Fitch that the assumption that Ghana, South Sudan, and Zambia would default on their loans from AFREXIM Bank is inconsistent with the 1993 treaty establishing the bank, to which Ghana and Zambia are both founding members, shareholders, and signatories. This year presents headwinds that exacerbate risk in almost all regions of the world, and Africa is in no way exempt. Low commodity prices and weak demand for commodities, including crude oil, due to a slowdown in global economic activity, has implications for Africa with many resource-based economies. Normalization of interest rates seems slower than initially thought, especially in the United States, thanks to nervousness around impact of tariffs on inflation. A higher for longer rate regime has implications for capital flows to the African continent. The third thing we have seen in some economies in Africa is a stickiness in double-digit inflation. Ghana, Nigeria, for example, worsened by rising instability in regions like South Sudan and fiscal distress due to rising debt burdens in many countries. The post-COVID recovery in Africa is at best fragile, as reliance on foreign markets, volatile commodity exports, high debt, and weak infrastructure have deepened Africa's vulnerability to recent shocks. It's not clear how new US tariffs will affect Africa and whether old pacts like AGOA will stand, but risks are escalating and rating agencies are being more alert. But there is still strong investment interest in Africa. Last week, Petrobras said it aims to make Africa its main region of development outside Brazil. Ivory Coast is collaborating with Petrobras to explore deep and ultra-deep waters off its coast, involving several offshore exploratory blocks. A risk downgrade for AFREXIM Bank should not deter its resolve to be a financial engine to all the exciting possibilities in the continent. Still, rather than enter into debate with Fitch, analysts call for stronger intra-African trade, more strategic investments in transport and technology infrastructure, also finding ways to improve ease of doing business, and diversifying economies to build better resilience to global shocks. The future for Africa is bright, despite some clouds in the near term, which Fitch cannot ignore. Some more business stories. Concerns about tariffs and the US economy are easing among many traders and investors as US stocks ended the week on a positive note. Also buoyed by a monthly US jobs report that calmed worries about the economy. US non-farm payrolls was up by 139,000 in May after 147,000 increase the previous month, but still slightly better than the market expectation of 130,000. Unemployment rate held steady at 4.2% as expected, while the labor force participation rate edged lower to 62.4% from 62.6%. Annual wage inflation, as measured by the change in the average hourly earnings, remained unchanged at 3.9%. Today, officials from the US and China are expected to begin trade talks in London. China's foreign ministry said on Saturday that Chinese Vice Premier He Feng will be in the UK between June 8 and June 13, adding that this is the first meeting of the China-US economic and trade consultation. Progress tends to be traditionally slow when the US and Chinese meet. Today, we saw the Japanese economy showing no growth over the quarter in the first quarter of 2025, above the market expectation and the previous estimate of minus 0.2%. Japan's gross domestic product fell at an annual rate of 0.2% in Q1 compared to minus 0.7% in the previous reading. Amid a lot of noise driving volatility in global markets, trade headlines, Elon Musk, the fate of the tax bill in Washington, legal pushback on immigration action, and so on, there are, I would say, two major events this week that may stand out in helping investors focus on important signals. First is the Wednesday CPI read. With Trump imposing a 50% tariff on steel and aluminium, which has gone into effect, analysts say we could see an uptick in the inflation read. The CPI report will put the improved rate cut optimism to the test, as it might show a stalling in what was a recent disinflation trend. Analysts expect the headline CPI to inch up 2.4% year-on-year in May, up from 2.3% in the prior month, while core CPI is projected to stay unchanged at 2.8%. May producer price index, which follow on Thursday, will also be important in gauging underlying price pressures. Lower inflation data will help rate cut bets weaken the dollar, but more likely bolster Wall Street sentiment. The other event, Apple's Worldwide Developers Conference, WWDC 2025, kicks off in California also on Monday. That's today, offering developers and users a look at the changes coming to the company's software products throughout the next year. Can this event give a much needed bump for Apple's stock? Apple is expected to give its most important software facelift. They're calling it a major update of the looks of iOS, iPadOS, and macOS with a completely new design. It's touted as the biggest stylistic transformation for iOS since 2013 and the most extensive revision of macOS since 2020. Apple is also expected to show off a new AI tool to improve battery life. And they're also having this AI-powered live translation feature for AirPods. The battery manager will increase or decrease power output depending on what you are doing on your device, while live translation for AirPods will allow users to understand people speaking in different languages. Apple is also reportedly working on a new centralized gaming app for its devices to replace its current Game Center application. After many delays, 1 year after introducing Apple Intelligence, Apple is still yet to make a name for itself in the AI space, as rivals like Google continue to charge ahead. And Apple's current AI tools, they don't stand out in the offering of experiences when you compare with other products. Others say Apple, despite the slow rollout of Apple Intelligence, still has, they can still catch up. They have the opportunity to monetize Apple Intelligence moving forward. Apple shares are down 18.7% year to date as its prospects were buffeted by tariffs on products imported from outside the US. Apple shares closed on Friday up 1.64%. Should you be buying the dip with the stock 21% below its peak? Many analysts still warn that Apple is expensive, with the price to earnings ratio at 32 right now. But I'm not sure I agree that this is a dip to shun, given the track record of Apple in terms of their ability to bounce back. This week's event may shed some vital clues. Markets cannot keep ignoring clashes between law enforcement officers and protesters in Los Angeles, extending for a third day as the National Guard was deployed to stamp out demonstrations against raids on suspected illegal immigrants. U.S. futures are trading with modest losses, but the focus remains on the China-US trade talks headlines, also as we get May CPI on Wednesday. L'Oreal is buying British skincare brand Medic 8, owed by inflection, boosting the French cosmetic giant's offering in the fast-growing dermatological skincare market. Medic 8 focuses on vitamin A-based anti-aging creams and serums. The deal will help Medic 8 deepen its presence in existing markets and expand globally. From June 22nd to 25th, 2025, the Corporate Council on Africa, that's the leading U.S. business association focused solely on connecting business interests in Africa, will meet in Luanda, Angola to engage world leaders and business owners to strengthen ties between the U.S. and Africa. Themed Pathways to Prosperity, a shared vision for U.S.-Africa partnership, the summit aims to open a new path for U.S.-Africa collaboration. A decent U.S. jobs report and resumed trade talks between the U.S. and China, raising hopes for growth in the world's two largest economies, could be helping crude oil prices. Brent crude now over $66 a barrel, flat today though. Still on crude, Morgan Stanley analysts report that the 411,000 barrels per day OPEC Plus pledged to add in May is not happening, as Saudi Arabia and other producers show little sign of ramping up production significantly. But analysts still expect a global surplus to drag prices between June and September, driven by non-OPEC Plus production growth outpacing demand. Asian markets climbed as investors awaited news from trade talks between Washington and Beijing later in the day, also digesting implications of China inflation and trade data. In China, we continue to see worrying deflationary trends as demand continues to be weak. The consumer price index fell 0.1% from a year earlier, but still better than estimate of a 0.2% decline. Consumer prices have fallen for the fourth consecutive month in May, as Beijing's stimulus measures are still yet to boost domestic consumption significantly, with price wars in the auto sector adding to downward pressure. Still in China, exports to the US dropped the most in 5 years, plunging 34%. Imports from the US also fell over 18%. China's trade surplus with America shrank by 41.5% year-on-year to $18 billion. The drop in China-US trade was, however, offset by shipments to the Southeast Asian bloc, which jumped nearly 15% from a year earlier, and those to European countries and Africa, which rose 12% and over 33% respectively, as we see China pivoting there towards Africa. And thanks to China-Africa trade and trade with other countries like the EU, the total trade surplus still increased 25% from a year earlier to $103.2 billion in May. Also, a new Boeing 737 MAX landed in China. That was today, according to flight tracking data, a sign that Boeing has resumed deliveries to Chinese customers as Beijing and Washington ease their tariff war. Well, that's it on this edition of Global Business Insights. Bye-bye.